If you are buying your first home or just renewing your policy, you should know that homeowners insurance policies can vary significantly in their coverage and the value they provide in the event of a claim. Here's a breakdown of the differences between basic, broad, and all perils coverage, as well as the distinction between actual cash value, ACV, and replacement cost value, RCV, in home insurance policies. 1. Basic, broad, and all perils home insurance. These terms refer to the types of coverage offered under a home insurance policy. They indicate the level of protection provided for different risks and damages. Basic, named perils, coverage. This is the most limited form of coverage. It only covers specific perils, events, or damages that are explicitly listed in the policy. If a peril is not listed, it is not covered. Typical covered perils include fire, lightning, vandalism, theft, windstorms, and hail. However, damages caused by things like earthquakes, floods, and mold are often excluded. It's generally more affordable because it provides limited coverage. Broad, named perils, coverage. This type of policy expands on basic coverage by including additional perils. While it still lists specific risks, the list of covered perils is longer than basic coverage and may include things like falling objects, ice, snow, and water damage from plumbing systems. Still, certain perils, such as earthquakes or floods, are typically not covered under this policy. All perils, open perils, or all risks, coverage. This is the most comprehensive form of home insurance coverage. It covers all risks and perils unless they are specifically excluded in the policy. This means that if something happens that isn't listed as an exclusion, the insurance will generally cover it. Common exclusions might include intentional damage, wear and tear, or damages from floods or earthquakes, which would require separate policies. All perils policies provide peace of mind as they cover nearly any scenario except those specifically listed as exclusions. 2. Actual cash value, ACV, versus replacement cost value, RCV. These terms refer to how your insurance company will compensate you for damages or losses to your property, and they influence the amount of your claim payout. Actual cash value, ACV. ACV is the amount it would take to replace an item, minus depreciation. Essentially, ACV reflects the current value of the property at the time of loss, factoring in the depreciation of the item or structure. For example, if a 5-year-old roof is damaged, the ACV payout would only cover the cost of replacing the roof minus the depreciation for its age and wear. ACV typically results in lower claim payouts compared to RCV, since it accounts for depreciation. Replacement cost value, RCV. RCV is the amount it would cost to replace an item or property with a brand new version of the same item or property, without factoring in depreciation. For example, if your 5-year-old roof is damaged, RCV would cover the full cost of replacing the roof with a new one, regardless of how old your roof was. RCV policies tend to be more expensive than ACV policies because they offer more comprehensive compensation in the event of a loss. Actual cash value, ACV, pays for the replacement cost minus depreciation. A 5-year-old damaged roof will be replaced at its depreciated value. Replacement cost value, RCV, pays for the full cost to replace with a new item, without depreciation. A 5-year-old roof will be replaced with a new one at no depreciation cost. In general, all perils coverage combined with RCV provides the most comprehensive protection for homeowners, but it also tends to come at a higher premium cost. On the other hand, basic coverage with ACV is more affordable, but may not provide as much compensation in the event of a loss. For more information on homeowners insurance, be sure to get your copy of KISS Public Adjuster Study Guide. It will help you understand the concepts of insurance and hopefully keep you from making costly mistakes.